Aaron Kennedy here with Evan New and Jamal Carnett, and this is our weekly tech recap. One of today's biggest stories. This week, Google bought Bump. Bump is a special app where you take your phones and
You bump them.
They bump. What do you think about this purchase? Bump has been around for about 5 years. Why is Google buying it now?
It's kind of an interesting timeline because Bump came out, in 2008, and it started on the iPhone as one of those first real innovative apps on the iPhone where you bump the phones, they use the sensors in the phones, and the matches in the cloud using location data to transfer information. Kind of strange that only now is Google looking at buying them, and you have to think that they have something else in mind for it. And incidentally, they also launched Google Wallet this week on iOS and removed the requirement for NFC. So it looks as if Google is trying to maybe move away from using near-field communications as a short-range transfer protocol, which is something that Apple has always stayed away from.
So Apple has long resisted the use of NFC, and Google basically pioneered it. They were the first to start, or well, not Google, but Android manufacturers.
Right.
Why do you think Google is moving? Do you think they're taking the cue from Apple? They're trying to use a different technology for a particular reason?
That's a great question, Aaron. I think overall, I'm trying to look downstream on who this is going to affect, and I see kind of the big loser here as being NXP Semiconductors. They've spent millions of dollars in man-hours co-creating this product. Now, we don't know exactly what Google is planning to do with this technology. We don't know if it's going to be something for Motorola Mobility, that side, or if it's going to be, overall something they plan to work on the overall Android OS. But I think we're going to have to look towards Samsung to see where they're going to go with this before we look any further, because Android is an open system open source operating system.
Evan, what do you think about this move in terms of how it relates to Apple?
I think that everyone's been waiting for Apple to get into payments, and with their new fingerprint thing, that's clearly like a precursor to some type of payments technology. At the same time, Google's been using NFC for payments. Apple probably has something else in mind other than an NFC. So, all of this short-range stuff really ties into payments because that's a huge opportunity for both companies. And the question is, if Google wants to move away from NFC for its payment technology, will it kind of instead use maybe a similar approach to Apple and relying on things like Wi-Fi and Bluetooth and just plain old cell data instead of something that requires more of an infrastructure like NFC?
Can you elaborate further on the fingerprint sensor for our viewers who might not know what Apple's doing?
So Apple just put a fingerprint sensor into their newest flagship iPhone 5S. And right now, the use case is kind of limited to just unlocking the phone and buying things through iTunes and authenticating that way. But it seems like the possibilities are endless with regards to payments specifically because it's such a secure system. And with all this payment info on your phone, you really need to be very secure, and that's kind of Apple's play, presumably. They haven't announced anything, but at the same time, they do have millions and millions, hundreds of millions of iTunes accounts with credit cards on file, so it just seems inevitable at this point.
So let's talk Apple's iPhone launch weekend. They already had pre-orders going for the 5C. 5S pre-orders just started this morning at midnight. What do you think investors can expect from this weekend? They haven't announced. Normally they announce all the pre-order numbers with great fanfare so everyone can applaud. What do you think? Why did they hold it back?
It's a great question. I expect decent numbers, but I expect overreaction by their investors in any way. I think right now it'll be overreaction to the upside if they sell more than 7 million. And I think it'll be overreaction to the downside of 5. It's looking to be that 6 million typically tends to be that Goldilocks number. As far as the reason they held back on that, not quite for sure, but this is going to make it a very exciting announcement when the numbers do come out.
Do you like Jamal's numbers? Do you think 7 million is top end, 5 is low end?
I think that's about what the buzz on the word on the street is. Last year they sold about 5 million iPhone 5 units over launch weekend, which actually disappointed investors and triggered the year-long pullback. And this year, people are kind of expecting maybe in that 5, 6, 8 million range. A lot of estimates because Apple's kind of played it so close this year.
Why do you think they played it so close?
There's a lot of differences this year. The first off is that they have 2 models this time, and as you mentioned, only one of them is available for pre-order, and the other one is not, or wasn't. So there's this kind of distinction there, and maybe there's supply constraints built into that silence or something. But I think that investors are going to be hoping for big numbers, and I think that another good news for Apple is that for possible upside is that they are now launching in China as one of the launch countries, which is a big market for them. Even though they haven't announced the China Mobile deal yet, it's still a big market for them to bring in as one of the first round of launch countries. And in addition, now they have NTT Docomo. Japan has usually been in the first round of launch countries, but now they have the biggest carrier in Japan for that launch.
So Apple clearly has a lot more international opportunities now. They're expanding into China further. They've expanded further into Japan. Do you think investors are focusing too hard on shiny new iPhones and kind of dismissing these new opportunities?
I agree. I also think the iOS 7 updates were also not covered as extensively as I would have liked. The China Mobile deal, I think everybody was looking forward to that. Some big splashy deal out there. So I think the optics of it may not have been up to investors' expectations.
Okay. Can you think of any other notable differences? I know, so they're launching 2 phones. They've gone international. What else do you think is different this year?
Well, first of all, the share price, for one. I mean, last year it was the all-time highs, 700. So there was a lot of expectation, optimism kind of built into the share price going into the launch. And of course, that disappointed, and now we're back in that 460, 470 range. So I think, and obviously the valuation has come down a lot too. So you would think that the expectations of what needs to happen to satisfy investors would also be lower. But then again, Apple's a very emotional stock.
Emotional stock, I love it.
I mean, the investors are emotional about the stock at least. So, I mean, it can react any way, even if the numbers don't really add up right.
So that leads to a great question. Is Apple undervalued? Are shares undervalued?
I'm going to say yes right now. If you look at the PE ratio, if you look at the growth rates, I mean, they're trading at a peg with analyst estimates of forward growth rates of right about 0.6. I still believe it's an undervalued play, absolutely.
Do you think Apple's undervalued?
I mean, I think it's such a compelling valuation right now that even if you don't get crazy growth, which I don't think you will anymore, I mean, you could even get decent share appreciation just from it coming to like a market multiple, because right now it's at about 12 times earnings. The market's at like 17. And I mean, I think most people would agree that Apple is one of the better companies within the market universe, yet it's valued at the very low end. So it's kind of a strange discrepancy there.
Okay, let's move on to Apple going on the defensive. Apple gave a round of interviews. I believe it was Johnny Ive, who is the design chief, Tim Cook, and Craig Federighi. They gave a round of interviews to Business Week, and I remember the cover said, "What us worry?" Why is Apple on the defensive suddenly? Do you think maybe is the best offense a good defense?
Well, the timing is very clear that they're aware of all the consumer and investor perception that's really following them right now and kind of overhanging, because everyone has this pessimism now with Apple, like, oh, the growth days are over, they're doomed. And like you said, the headline is very clearly like, should we be worried? No, we're not. And I think that what they're doing is they're really trying to get ahead of this and at least trying to explain themselves a bit to really rationalize the strategy that they've taken, because there's been so much investor criticism with, oh, iPhone C pricing is too high, you're not going after emerging markets,
One more thing
why
about
not,
iOS
low
7
cost.
that you brought up.
All these
iOS 7
storylines that are
coincided
very
with the release
prominent
of iTunes
on investors'
Radio.
minds.
That's right.
They're trying to
obviously it comes out on iOS
proactively
7.
be
It's
like,
also available on iTunes.
it's not
now.
that big a deal, guys.
So How I does hate this to affect make the Pandora? obvious comparison that everyone
I
always
actually wrote a
makes,
piece about this.
but
I think that investors, or I
2 or 3
think
years
overall
ago,
that landscape has
let's say 4
changed for
years ago,
Pandora.
could you see
Pandora
Steve
was
Jobs
always
getting-
struggling
could
with
you see Steve Jobs
content
getting on-
costs versus
getting
revenue
on the
growth.
front of the
And
magazine
over the last
being defensive?
2 or 3 years,
No, I
they've
don't.
had
I see Steve Jobs
revenue
being
growth
defensive.
of
Maybe just not
basically
to,
73,
the actual media.
74% a year. But the content
This is an
acquisition
important
costs were up
inflection
about
point for
90%.
Apple.
I mean, if you look at
So
the
they were
iPhone
always
5
struggling
when
with
it
the
came out,
business
as
as
Evan
is.
enter the
Earlier.
800-pound
Stock was
gorilla.
very close to
Apple
all-time
that's going to
highs,
release a
trading
product
high.
very
Apple could do no
similar
wrong.
with the same price the points iPhone for 5, the commercial-free, obviously the and rollout also, and everything. It's bought the of course, stock closer to for the reality, commercial-free, obviously.
It's going to be,
And I think that they're
free.
trying to get out to kind
So
of pre-butt.
I don't
some
necessarily. I
criticism if
think
the
that this
rollout
may be
does not
really
go as
hard
well
for
as they
Pandora
initially
going forward.
hoped with this 5S
What do you
and
think
5C.
of iTunes Radio? Is this
What did
something-
you think
Why did
about,
Apple do this? Why did they
Tim
have
Cook
to do
and
this?
Johnny Ive's
Doesn't Apple have
comments,
better
the
things
fact
to
that
do?
Well, I
They're
think
so
the
clearly
important thing
claiming
when you
it.
compare Apple and I mean, Pandora Tim is Cook that very iTunes specifically Radio was for like, Apple we're not was in the just like junk a side business thing, which is kind of a boost their
a nice little
ecosystem.
soundbite.
Did you like that as an Apple investor?
It's just a
Did you
complimentary
like to
service.
see
They don't
Tim
need
Cook
to make
getting out
money
there?
on it.
Well, I
make
think
it
what he's
worth
trying to
doing.
really
Whereas Pandora
differentiate
is the
is
exact
he's
opposite
trying to show a
because
contrast
it's-
between
there
there's
is
different
you know,
segments of
Pandora's
the market.
primary
You know, if you
business.
look back at the
So they
smartphone
need to do
market
it
5 years
properly
ago,
eventually.
smartphones were
And whether or not they
relatively
can
speaking
is
a
the
high-end
big
consumer
question
product,
that, you know,
and
investors
now
should be asking right
as
now.
competition in the
It
market
doesn't
matures,
look
that's
good,
really
you know, from all the points
it's
that
moving
Jamal's
down
making
market,
with, you know,
and all the
content
growth
costs
used to be on the high end,
revenue.
which is where Apple made all their money, and now
Apple can
growth is
undercut
shifting
pretty
to the low
aggressively if it
end.
wants
But at the
to.
same time, it's like,
So
is
basically,
that
Apple
really
doesn't-
a market
Apple doesn't
segment
have
that
to
Apple
win
wants
here.
to pursue?
Right, it doesn't need to
It has
make money
low margins
to make it worth doing.
emerging market
And as long
customers.
as it can
Generally,
get
users want just
you
a
know,
browser
so
in
long
their
as users
pocket,
like
so
it,
not really
it's a win
buying
for
apps,
Apple.
investing
like
in the
Pandora as a
ecosystem,
stock?
in which case they're a little bit less
Right
sticky
now,
and
no.
could potentially
I think the
switch more. So
scalability
not,
is tough,
you know,
and also I
compared
think
to
this new
a
entrant
high,
into
a
the
really
market
engaged
makes it
customer
really tough for
that
them
Apple
going forward.
wants. So
All right, so you agree with Apple's premium strategy, just targeting the high end, forget about the low end.
Well, I think that to a certain extent, investors are sort of over-focusing on just raw unit market share figures, because if you look at the broader market, right now Apple is underperforming in growth, but that's primarily because the low end is growing so fast. But if you were to like segment the markets into the high and low end, I think Apple's doing quite well in the high end. And when it comes down to it, Apple has a very successful business going in the high end. Even if it's not the growth business that it used to be, it's a very solid business that will continue to generate recurring revenue in cash for years and years for investors. And that's the important thing. You know, more important than, you know, how is their exact market share when you include these low-end models.
Well, so a lot of people were a lot of investors and analysts were disappointed with the pricing for the 5C. It wasn't low enough, too much of a premium, it's not going to sell like hotcakes, that sort of deal. Do you agree with Apple's strategy there?
I actually was a little disappointed. I would like to see the price be a little lower on the 5C. And the interesting thing about the article was some of the examples Tim Cook used. I think he used VCRs and DVDs. Like, those are the areas that have came down. When they first came out, it was $1,000 for a DVD player. Now it's, you know, you can get one for 99. Exactly.
Yeah, $20 at Walmart.
So consumer electronics has always dropped in price. So, and I think that's where investors are looking. Can Apple counteract that? You know, can they obviously they've taken the tack that they're going to continue to try to keep high margins. But are you fighting economics, the theory of economics by doing so? So I found that comment to be funny, and I would have liked for the 5C to be priced more competitively.
All right, Microsoft this week announced a 40 billion share repurchase program. Investors, the share price didn't react much. Investors didn't seem that jazzed about it. What do you think about this move?
I actually think this is a good move for Microsoft, and I'm actually liking some of the moves that they're taking. They're actually doing something. After a decade of inactivity and being late to the ball game with pretty much everything, it does appear that they are trying to make strides to be, number one, to grow the company, and to also be a shareholder-friendly company, even more shareholder-friendly company with increasing their dividend and also the share buyback. Right now, I believe it's projected that they're going to grow about 8% over the next 5 years. I think that may be a little under. I think that may be a little bit to the underside. And I think Microsoft may be a stock to watch.
I have a question for you. You're saying Microsoft's a stock to watch. Microsoft right now is going through huge changes. You know, CEO's on his way out, just bought Nokia's handset, or made an arrangement to purchase Nokia's handset division. Do you think this is a risky bet right now?
There's a lot of money that they're putting behind all of these different initiatives. On one hand, this $40 billion is really just replacing an outgoing $40 billion repurchase program. So it's really just kind of more of the same. And if you look at their cash position, they have about $77 billion in cash total right now. 70 of that is actually overseas, so the majority of it is out there. And they're using that overseas balance to buy Nokia's business, so plenty of cash out there. So the repurchase program will have to be funded by domestic cash flow. But they've consistently done this over the past few years. Since 2008, they've generally bought between $5, $11, $12 billion back in stock each year. So they can certainly keep affording to do it. The dividend's a nice thing because Microsoft is a pretty favorite among tech-oriented value investors looking for income because they have a nice yield, and this delivers on that end of it. But there is a lot of risk generally because of all the changes that you mentioned. The whole future of the company is kind of up in the air right now.
Now, you mentioned the buyback program. Contrast that with Apple's buyback program. When Apple announced buybacks and started doing them in the March quarter, shares responded favorably. Sure. Investors liked that. What was so much better about Apple's program?
Apple's operations. Investors saw Apple as a company that obviously is going to continue to grow and is going to continue to put out great products. So there gets to be a little bit, hey, is this buyback basically a sweetener for a company that isn't performing very well? Or is this buyback basically a great on top, a great benefit on top to a great performing organization? I think investors chose Apple to be, of course, the on top of a great organization, and Microsoft to be, hey, are you just inducing us to stay in the stock?
It's just a sweetener, trying to keep you corralled in.
That's right.
I mean, I think that the big thing with comparing Apple and Microsoft's buybacks is if you look at Apple's, they increased to about 60 billion authorization, and then Microsoft's is 40. But there's a big difference between the authorization and what the company actually does with it. So, like I said earlier, Microsoft is doing about 11 to 12 on the high end for the whole fiscal year. And the big revelation for Apple in the March quarter was that they bought 16 billion back in one quarter. So, their 60 billion authorization was good for several years, but now all of a sudden they just immediately plunge in one quarter, a giant repurchase. And I think that speaks a lot for when you compare the two programs.
Well, for Evan New and Jamal Carnett, I'm Erin Kennedy, and we'll see you next week.